original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Welcome back to Squawk Box on CNBC, live from the NASDAQ market site in Times Square. Here are some of the stories investors might be talking about today. Chinese telecom giant Huawei is accusing the U.S. of launching cyber attacks against it. Huawei says that the U.S., in its words, is using every tool at its disposal to disrupt its business. It's instructing law enforcement to menace its employees. Those accusations follow news that the U.S. is probing several new alleged instances of intellectual property theft by Huawei. And Volkswagen will not be excluded from seeking government contracts in the U.S., part of a new agreement between the German automaker and the EPA following all the diesel emissions scandals that we saw in the past few years. However, VW will be required to install a second U.S. official at its German headquarters as another monitor of those activities. And RBC Capital Markets has raised its price target on Amazon shares to $2,600 a share from $2,250. That's going to be that would be a big market cap company. That would be a so-called big cap, well over $1 trillion at 2,600. RBC bases the call on optimism surrounding Amazon's new Prime one-day shipping initiatives. The shares are down this morning, but up almost 18% this year, and a long way from where some people wanted to short at $1,000 because of government regulations coming in.
And Steve Leisman is here. So welcome to September, folks, otherwise known as a huge month for some of the biggest central banks around the world. And Mr. Leisman joins us with the latest from what we may be hearing from them.
Yeah, Andrew, the breeze investors feel not a local win. It's a global downdraft in interest rates that is expected to pick up speed this month. September 12th, the European Central Bank meets their expected to ease in one way or another, followed by the Fed, followed by BOJ and the Bank of England. Bank of Japan, it could, with the European central banks and the Fed do, could boost the yen. That could pressure the BOJ to cut. Mark Carney at the BOE, he'll likely hold fire until he knows how the UK ends up exiting the European Union. In an exclusive interview in Jackson Hole, Carney talked about the impact of Brexit.
Business investment is actually running almost 25 percentage points below its previous trend. Businesses in the UK have quite reasonably said, wait a minute, I'm going to wait until, if they have any exposure to Europe, either upstream or downstream, they've decided to wait and see, well, what are the new rules of the game going to be? That's part of what's happening worldwide, is people are saying, well, okay, well, I've got exposure to a Chinese supply chain or U.S. Let me see where this settles out.
Here are the differentials in global interest rates. China at 4.35. They have some room to cut. U.S. at 2.125. Carney's got 3/4 point rate cuts to use. Europe's at 0. Japan at minus 0.1. One, emerging markets, they've been in on the action in a big way. This is from a Reuters story over the weekend. 37 emerging market central banks they looked at. Net 14 cuts in August. That's up from 8 net cuts in July. It is the 7th straight month of net cuts from emerging markets. Guys, what we don't know, the central bank, this easing, should be a tailwind for investors. Is it enough to overcome the headwinds from trade and other issues of slowing economic growth around the world?
It should be a tailwind until it's not, which Morgan Stanley is highlighting that it may not be the case anymore.
Because it's just not effective anymore.
It's just not effective anymore.
I think that is partially true. I think what we don't want to do is try to figure out how true it is. In other words, not do it. I think they'll do it until they feel like the risks of what's happening in the bond market, in the lending market, in the banking system overcome whatever gains you may get from easing.
Right. Steve, stay with us. Let's talk more about the Fed's big month ahead and the different kinds of pressures it is facing. Joining us now is Dino Cost, Chief Regulatory Officer at CLS and a former New York Fed official, Joe Livornia, Chief Economist of the Americas and Natixis, and a CNBC contributor, and, of course, our guest host, Mohamed El-Erian, Allianz Chief Economic Advisor. Lots of people at the table, lots of opinions. Dino, let's start with you. In terms of what the Fed will do, how much do you think it will be influenced by, say, what the ECB does days before that? And it's ironic because we were just talking about how globalism in trade, it's being rolled back potentially, or maybe it's at a standstill, and yet the globalism in monetary, everybody's influenced by everybody right now.
Which tells you the importance of the exchange rate, right? Mm-hmm. Because this is where the monetary policies come together. This is where they influence one another, is what's happening to the exchange rate. The fact that the dollar has been appreciating, it's a tightening of financial conditions. The Fed's going to be sensitive to it. The ECB moves, they're not going to, and you have the euro sliding, which it has been moving slowly, very, very slowly. The Fed's probably going to respond to that because, not as to target the exchange rate per se, but to try to ease financial conditions. So again, this is about, even though globalization is maybe being rolled back, still economies are connected through the exchange rate, and that's what you're seeing here.
And so should that factor into what the Fed does? When they sit around the table, should they say, hey, the ECB did X, Y, and Z?
They're not going to put it in those words, but it will be in the back of their mind, and it will be influencing them, and they'll be thinking about it for those reasons.
So, Joe, how do you think about that? And let's say Europe, let's say the EU does some sort of stimulus plan. How could that impact what we see here?
The exchange rate is the channel through which monetary policy, even with very low rates, can actually influence things, as Steve was alluding to. And I would agree. You don't want to wait to see maybe if it's not effective in case the economy slow more. And Dina was saying the Fed may not talk about it explicitly, but the exchange rate's a big issue. EMFX within the emerging markets, the dollar is extraordinarily strong, and I think the Fed should cut rates 50, if not more. They'll only go 25. But exchange rates are something that impact things. Commodities are priced, as you know, in dollars. The dollar's been strong, and that's weighing on. That's causing global growth to be softer.
Why should the Fed have this weight on its shoulders?
So it shouldn't. It's interesting because I think we all will agree that the Fed's going to cut. We'll all will agree there's 1,000 points of rate cuts priced into markets around the world already.
1,000 or 100?
No. For the Fed, 100. For the world, 1,000.
Wow.
Okay. So, and we all agree that currency plays a major role in this because no one wants the currency to appreciate. Where I suspect we're going to disagree, and it's really important for markets, is separating the economic effects from the financial market effects. There's 3 scenarios. One is the Fed is effective in both. It boosts the economy, it boosts asset prices. That would be great. I don't think that's the case. The other one, the other extreme, is that the Fed boosts neither anymore. It's ineffective. And the middle one is that it boosts asset prices but not the economy, which is where we've been for a while. And it really matters whether you think that we're going from here to here. I think we are. And I think there's real cost in delivering on what the markets expect you to do. It doesn't mean that the Fed won't do it. It's just that we have to be much more aware of what Bernanke said. It's about benefit, costs, and risks, and we now have entered the cost and risk world.
The only problem, Mohammed, is if the Fed doesn't cut or disappoints, asset markets led by stocks will sell off meaningfully further. So they're stuck. They're stuck
and
between
got to worry about
the proverbial rock and a hard place.
But it's important. They're stuck in a lose-lose situation.
Well, they're right. So you pick the lesser of the two evils.
I think one of the things that, Melissa, I would alter your question a little bit.
Okay.
We may be deglobalizing, but we are by no means deglobalized. Okay? Sure. We are seriously in a world that is dramatically interconnected. And we were really just beginning to understand those connections. You ask a Fed official or anybody who runs a model, how much do they factor in global economic weakness into U.S. GDP? Nobody really knows. I mean, we had some estimations in 2018 versus 17 that maybe you cut a half a point off because global economic weakness. The other aspect of this, and I think Mohammed was talking about this in the last hour, is you may have central banks easing together. At the same time, you have finance ministries pulling apart. And the extent to which Europe and the U.S. can act together or in concert with each other to make sure we don't have a currency war, it's unclear. Remember, you have the president urging the Fed to use the interest rate as a tool to value the currency, which is the opposite of the G20 statement that was made in the middle of the crisis. We shall not use our interest rates to value our currency.
Did they say shall?
They did not say shall.
Well, you just quoted them saying shall to make it sound like
I did not do this.
Exactly. The intent was there.
Okay.
It
sounded like it came from God. The way
it was
you just
a
said
commandment. It was. They all got together and said, "We ain't doing this.
Don't hype it." Okay.
We ain't doing this. And now you got the president doing this. Now, again, I've said this 100 times. The president has this way of making stuff that we don't want to talk about sort of apparent, kind of like taking the Band-Aid off the wound. It is true. As you use your interest rate, it affects your currency. So I guess I throw the question to Dino. Is it time for them? Can they all sit down and figure this out together as central banks? Will they?
You know, they have a chance every 2 months. They get together at the BIS in Basel. Lovely building. They get together at G7 meetings, G20 meetings. I mean, there's no shortage of avenues where they can. But I think the truth is that ultimately there's domestic interests that matter. They're going to be looking at their own exchange rates. You're absolutely right about the impact that the global situation has on domestic forecasts. If you go back to look at FOMC transcripts from 20, 30 years ago, the international side didn't really factor in very much. Hardly factor in at all. You look at them now, it factors in a lot. If you look at the statements, it factors in. You look at the speeches, they factor in. So even if the world is becoming deglobalized, still, it matters for policy. It matters for the exchange rate. It matters for confidence channels. It matters for investment, cross-border investment. It just does. So whether they say it or not, it matters. What the ECB will matter for what the Fed does.
Okay, we got to go, guys. Thank you so much, Dino, Joe. Mohammed's going to stick around. Thank you, Steve. We do want to hit some headlines from Chinese state media attributed to China Vice Premier Liu. He says China firmly opposes the trade war. It is not good for China, the U.S., or the world. He says he hopes the two sides see common ground while setting aside differences. And he says that he hopes to appropriately resolve the issue on the basis of equality and mutual respect. We have futures coming off of their session lows just a touch, but we are still indicated to open lower on the S&P 500 by 16 points, on the NASDAQ by almost 40.
Coming up, we're going to get you up to speed on the breaking IPO news this morning from dental technology company Smile Direct Club. Okay, anchors everywhere. Excited, I think, for a cheap way to get a better smile. And then we're going to talk about the biggest opportunities in the tech sector with noted investor Ann Winblad. Stay tuned. It's all ahead when Squawk Box returns.
What a time to be alive.
LinkedIn Learning offers more than 14,000 online courses to help you achieve your goals. Its short video tutorials cover business, technology, and creative skills employers look for at every level, all taught by real-world industry experts. And new courses are added every week. Plus, LinkedIn Learning is personalized, recommending courses based on your interests and skills. Start your free trial at linkedinlearning.com. Cancel within the first month to avoid any charges.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to Tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at Tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow, because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Some big IPO news out this morning on dental tech company Smile Direct Club. Leslie Picker's chasing the roadshow action on the streets of New York City. Joins us now with the latest. Leslie.
Hey, Melissa, we're here at JP Morgan. They're the lead underwriter for that Smile Direct Club IPO. The executives are upstairs inside here right now. They're doing a teach-in with the JP Morgan sales force. The purpose of that is so that they can all be on the same page before hawking the deal to investors. And there's a lot of shares to be sold in this offering. It'll amount to about $1.2 billion at the midpoint of the range. Valuation around $8 billion. Guys, that's nearly triple the one they received in their latest private round just last October. That valuation represents about 19 times their 2018 sales of $423 million. And this will be the latest test of investor appetite for that direct-to-consumer model. Smile Direct Club offers teeth alignment products at a fraction of the cost of traditional orthodontia, all done online, meaning their customers never have to step foot in an orthodontist's office if they don't want to. And they've captured a sizable customer base in the 5 years since they were founded, about 700,000 smiles, they say, that they have fixed. But in that time frame, losses have widened. Now, the executives here will have to make a convincing case to investors that the market for teledentistry still has room to run, guys.
All right, Leslie. Let's smile, Leslie. Can we, how are we doing, you think? Look at those teeth. Prospect?
This was braces. This was braces.
That's braces.
These were braces. Yeah, in high school. It was not cool. Not a cool look for me back then.
Is there a pain-free way to get your teeth bleached? Does anyone know that?
That's a good question.
Thing I see all the time. There's
They do offer bleaching products, but...
Have you not seen? There's a new thing I see on Instagram.
No, I had it done.
This thing that it's light.
A tray?
It's a tray that's doing like laser light on your thing, on your mouth.
I had it done to me, and I was, whatever they asked me, I was telling them if they would stop. The troops are over there. They're hiding behind that. I mean, I gave up it was so, have you had them? You had it done?
No.
Nobody will admit it.
It's
I didn't have it done, obviously, because I wear a yellow tie for my, or a brown tie for my yellow tee. But it's very difficult to sit through that for a couple of hours. And even the crest things, I think.
The strips?
That I did years ago.
You still look good. You still look good, but you're a young man.
Maybe like 10 years ago.
You're a young man. All right, let's get out of here. Thanks. Too much about us. Thanks, Leslie. We're under an hour now from the opening bell on Wall Street, so let's focus on some stocks, particularly tech stocks, as we start September. The sector is in the lead for the year, up 28% since January 1st. Joining us now to talk where she's finding opportunities in tech is Ann Windblad, founding partner at Hummer Windblad Venture Partners. We had someone on pretty savvy earlier and just saying, you know what, forget growth, just buy value. If there is a recession or a slowdown, these are already discounting it, and just don't deal with any type of growth stocks. Do you ever look at macro things like that, or you're always in your own universe with tech, and you're always going to be able to find something you think is a good buy there?
Well, my own universe is tech, so those are the companies I actually know. It's the dynamics with customers that I know from our own investments. We talk to the customers a lot on what's driving their long-term strategy. And that's why I think tech is still really a good investing area.
You know, you were we used to talk about who would get to $1 trillion first, and they all did. The ones that you thought would, that might get there before Apple, eventually got there. They're not all still there, obviously, but everybody's touched that mark at this point. In the top 5, are there some that you think are better positioned? And we know who we're talking about when we, the Microsofts, the Apples, the Amazons, et cetera, Facebook.
Well, I think that the top 3 are Amazon, Microsoft, and Alphabet or / Google, because they are really the cloud infrastructure players. It's like buying the modern operating system. You can't operate your company without picking one of those cloud vendors in their cloud infrastructure. We saw last quarter that in the cloud business, although it's not segmented that well for any of those companies, but it looks like overall growth in that sector of their business was, for each of them, was greater than 40%, 75% for Microsoft. And this is not a winner-take-all market either you're not going to just pick one cloud platform, you'll probably pick multiples. So all 3 of them are the leaders in the cloud infrastructure area. The 4th company in that sector would be Alibaba, because they also have a cloud platform. So I think those are really 4 interesting picks, because you cannot run your enterprise without buying the cloud infrastructure from one or more of those companies.
And when I look at the individual companies, like you, I get very excited about what's going on and about the opportunities. But when I look at the environment in which they're operating, there's a massive political backlash going on, and it's just starting. The international environment is becoming trickier. How do you balance these things?
Well, it's challenging when you're looking at innovators. Today, if you look at any enterprise in the world, they all are fundamentally core software in almost all of their products. So it's hard to stop this train. It's a really fast-moving train, and these are modern trains. So if you look at companies like Microsoft, Amazon, Google, or even the next set of application and infrastructure vendors, like a new company like CrowdStrike or a Salesforce, you can't imagine an enterprise operating without them. And they're not going to operate just once. It's not install the software and move away. These are long-term integrated relationships on the cloud with these vendors. And it's how you interact with your customers, your suppliers, your employees. It's all software. So the backlash it's a lot of dramatic theater around these companies. For some of them, there are large penalties. There are also large treasuries here. These companies are also the companies that are doing the research and development for the world, essentially, in future markets like mobility, wearables, ambient computing, AI, machine learning. So you have to look beyond the macro environment and just focus on this is where innovation is happening.
Yeah, that you've been... Whenever I ask you for the next big thing, you give me that, and it's kind of, I don't know, it never excites me enough, Ann, but you've been right. That's where it is. It's all cloud-based, and its extension. There can't be another social media or another search or another. It's all been invented already, and I don't even know if we need a patent department anymore.
Yeah, that's why venture capitalists invested a record amount last quarter again, because we think it's all been invented.
It never has. Give me something sexy, though. I want to get excited about flying something. I don't know. Flying autonomous drones. You got anything for me? Jetsons?
I don't have any Jetson stuff for you. At least you and I know who the Jetsons are. But I do think that if you look ahead to a more ambient computing environment, not just speaking to Alexa or Siri, I think we're going to find in 10 years that we won't notice technology as much. We're talking about nascent markets like wearables and home computing, but that'll change a lot.
Yep. I think you're right. We have a way to go with AI. When I see what I say the most obvious things, dictating to Siri, and she comes up with she or it or whatever it is comes up with stuff that I can't even. I mean, it was so simple what I just said. Where do you even? So we got some work to do with the AI, I think. And I don't know. Anyway, thank you. And
thank you.
The cloud, cocktail parties. best thing to talk about. You know what I mean? Cloud. The cloud. Cloud-basedness. Alarian does it, right?
Fascinating cocktail parties you go to.
Yeah, exactly. Coming up, when we return, we're going to get you caught up on all things going on this morning in the market action, get you prepped for the opening bell. There's so much going on. We're right back in just a moment.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow. Because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Oh, thanks to our guest host, Mohammed Al-Arian. I need more time to thank you because I can't thank you enough. Thank you. We won't see you tomorrow. Becky will be back. Make sure you join us to see the return of the Quickster. Squawk on the Street is next. And Andrew will be here too.
Good Tuesday morning. Welcome to Squawk on the Street. Hope you had a good Labor Day weekend. I'm Carl Quintanilla with David Faber, Mike Santoli at the New York Stock Exchange. Kramer has the morning off. Welcome to September. Dow futures down about 200 as a new round of tariffs takes effect on both the U.S. and China sides. Got a big week ahead with ISM in an hour, a jobs number on Friday, Powell in Switzerland. Europe is red, and the 10-year back to 1.5. The pound at a 2-year low as Johnson threatens a general election. Our roadmap begins with new tariffs on Chinese goods heading over the weekend. No talks between the U.S. and China in sight.
And Hurricane Dorian battering the Bahamas as coastal U.S. states brace for the worst.
And a longer wait for Boeing's MAX. Could friction between the company and air safety authorities threaten a new delay for that fleet? We're going to begin this morning with the futures, though, slipping after those new tariffs on roughly $110 billion in Chinese imports went into effect on Sunday. The 15% U.S. duty hits consumer goods ranging from footwear and apparel to home textiles and certain tech products like the Apple Watch. A separate batch of $160 billion in Chinese goods are slated to see new tariffs on December 15th, but reports say getting some parameters for new talks is proving to be difficult.
Exactly. So I think that if you wanted to look at the bright side of that, the pre-open this morning says there was no real hope for averting the tariffs built into the market on Friday. It's not as if you have a deal being handicapped right now in terms of what the market's expecting. On the other hand, I mean, bond yields are still at their lows. They're not giving much of a sense that we're through this period of just general macro fear suppressing any kind of risk appetites. I mean, I think August took a lot more wear and tear on the psychology of the market than it did on the indexes, right? The indexes didn't have that bad a month, but it was just a lot of chopping around and a lot of indecision. And it's hard to know if September is going to be that different to start. On the other hand, everyone is now very, very, very up on the idea that September is typically a weak month, and I think people are already kind of defensive. So this is what we're fighting out, I think, morning to morning.
Yeah, I didn't want to be the first to mention seasonality, but it is historically the worst since about 1950. Worst month for the Dow, worst month for the S&P.
It's one of the more unequivocal seasonal patterns. However, more recently, it's not necessarily been as bad. It's like a coin flip as to whether it's up or down. Again, I think that the fact that August was already got people back on their heels, and you saw lots of outflows. You see all the sentiment work saying people are very uneasy right now, and that's a net positive, even though it's not enough. You need something to turn. You need some sense that the macro data is turning for the better, and that's not clear just yet.
Yeah, dearth of corporate news as well. Not really much for the market to grab a hold of in terms of any earnings or any other news that we might look for as things sort of pick up again from the holiday season or from the end of summer season. And so the handful of phone calls I had this morning with asset managers basically were trying to trade UGG. Here we are, and it's just going to be a slog, and it's going to keep going.
And, the rally for part of last week, I think, made it a tougher call today because it seemed like for a while, okay, if we were at the bottom end of this trading range, people come back to work after Labor Day. It seems like people are too negative. It might have looked like a fatter pitch to just try and say, fine, I'm going to bet for some upside here. Now it's a little equivocal. Interestingly, literally, the S&P is where it was a year ago. I mean, September 1st of last year, I think it was 29.13 it closed at. I mean, that's basically where we're going to open today. Good news is slightly lower valuation, much lower bond yields. Maybe that's enough to cushion things.
Yeah.
Where were we a year ago, Mike, in terms of the multiple? When you
17 forward. So 17 times forward. However, we now know that in the year since then, earnings fell short of what was expected then. Right. So in reality, you were slightly more expensive than 17. So it all comes down to whether you think the forward earnings right now are plausible or not. And I think there's a lot of question about early next year especially.
Well, your point about macro data, certainly we're going to get a steady diet this week. As we said earlier, ISM manufacturing in about an hour. We'll see if it confirms the contraction we saw out of market, which is not widely followed. Jobs number Friday. And then this speech out of Powell in Switzerland, which will give him a chance post-Jackson Hole to set the table for September. I mean, what else could he possibly say?
Right, to characterize exactly what they are engaged in right now. Obviously, I think they've backed away from the kind of mid-cycle adjustment language. The market seems to want to see a greater sense of urgency, but doesn't like if they have to go through a lot of bad news to get to a greater sense of urgency by the Fed.
Morgan Stanley this morning says we're past the point where falling rates help equity multiples.
Oh, without a doubt.
You think that's true?
Well, I think it's pretty much there. In terms of justifying higher multiples, I mean, you might mechanically get the bond-like stocks moving higher and the growth stocks getting more expensive if bond yields stay around here. But a rush to 1% on the 10-year, I don't think would happen under the circumstances where people would love paying up more for stocks, at least in the short term.
Sort of brings to mind Peter Bookvar this morning saying, look, the S&P is only a few percentage points from the high, but Russell's down 14, Transport's down 12, BKX down 20. Because a lot what's supporting the overall market are those types of names you mentioned.
Exactly. So, I mean, you could look at that two ways. One is the market has kind of imposed pain on the areas where it probably should, and there's a lot of kind of beaten up stocks that you can get just a basic kind of laggard leading effect. Last week we saw hints of that. Financials are just too cheap if bond yields don't go down anymore. That kind of a sentiment. On the other hand, the quality and defensive stocks would probably come in that.
Feels like we've had a little bit more momentum both ways also. In other words, based on the fundamentals, I can think of, for example, of a Roku, strong fundamentals, but that stock has just not stopped.
Yeah.
And on the downside, a number of companies that perhaps disappointed but have gone far beyond what one might have expected on the downside. I don't know if We're seeing a little bit more in this marketplace at this point in terms of both up and down, based on originally fundamentals, but moving far beyond that.
Last week's responses to earnings, I mean, mostly it was retail, did seem pretty extreme. They were just this kind of binary move. Obviously kind of an air pocket type of week, last week of August. But yeah, I think you could argue that basically people are keeping, in general, the market on a shorter leash, if only because they just assume that this is a late cycle moment. And, even if things are better, it feels like a last hurrah type of move. Now, I'm not saying that's right, but that's the psychology right now.
All right. There are some outlier calls for a monster rally in the back half. We'll talk more about that later. Joining us this morning, TD Ameritrade Chief Market Strategist J.J. Kinahan, Washington Crossing Advisor Senior Portfolio Manager Kevin Carone. Guys, good morning. Good to see you both.
Good morning, Carl.
Good to be here.
Kevin, any reason to think that September might contradict the seasonal pattern this year?
Yeah, well, you've got a world that's awash in liquidity, and the conversation you were just having really puts a fine point on it. We're at a point now where you're not seeing a lot in terms of growth. In fact, there's a lot of data out there that's pointing to maybe a weakening situation. You're going to get the ISM later today, which is going to be very telling about the real economy here in the United States during August. But if growth doesn't break, let's say growth were to hold on here, and you have all this liquidity and lower interest rates, there is a case to be made for higher multiples. No one wants to make that case this late in the cycle, but that would be the good case, that you have supportive central banks, low interest rates, really nowhere else to go, and unless you get growth cratering over, there is a bullish case to be made for stocks.
So is that the case you're making?
No, it's essentially we're following the data, but we need to be able to see both the good case and the bad case, and that would be the late cycle move to a frothy top, more on expanding multiples and liquidity than anything else. It's not really our base case, but it's something we need to be aware of. We are looking at the data, and what we're seeing is that global trends are weaker. Manufacturing around the world is obviously weak. That's why ISM for August is so important for us today, because that's really an early indicator about the cyclical part of the economy here in the United States, and it's very fresh data. So that's going to be meaningful for us to watch. But we're watching the data, and we're kind of in that middle place where things looked stronger earlier in the year and have calmed down as we've come through the summer.
JJ, where's your head ahead of some of these important prints?
Well, I like Michael's point earlier about the fact that we haven't really gone anywhere in a year. But one thing that has changed significantly, Carl, is about a year ago we were trading on the VIX at near a 16. Now today we're going to open, it looks like, at about a 20 level. And so with that, I think you're seeing what the real crux of the problem is for many people, particularly a lot of retail traders, and that is we're just stuck in this range, and it seems hard to see how we get out of it as long as the tariff situation exists. So it's going to be a matter of bouncing back and forth, I think, between about 2,750 and 3,000. We're, holding 2,900, which I think is a great thing overall. But again, I look at what our clients have done over the last 2 months, Carl. They've actually been net sellers of equities and buyers of shorter-term fixed income because they're waiting for this moment, so to speak. Who knows when it's going to happen, when we get some settlement one way or the other. And I think we're at a point now where, of course, we care how this settles, but the market just wants some settlement one way or the other. One of the biggest things that concerns me about, the earnings season that just ended is nobody talks about infrastructure or investing in infrastructure. And if you're a CEO, how can you make the choice to do so when you don't know where we're going to land? It's one of the reasons stock buybacks, I think, will continue to support many of the stocks in this market because companies have the cash. But why would I go to infrastructure when it's the type of thing that can get me fired, whereas, buying back stock is not necessarily going to do so until there's a clearer picture?
Kevin, one of the reasons that the volatility index is up around 20 is that, to an unusual degree, almost all stocks are moving in the same direction on a given day. So everything seems to be correlated. We're very much in this macro mode in terms of how the market's behaving. Does that give you anything as a kind of a fundamental asset manager in terms of opportunity to say that some stocks don't belong up here or down here, given that the whole market's moving as one?
We look at a much broader group of things than just the VIX. There is the month of August was bad for financial markets. There was a lot of nervousness and anxiety that is shown in the VIX. Very hard to trade the VIX, we found, but ultimately, what we're what we'd be concerned about is if market psychology begins to bleed into business decision making and how investors feel about stocks and consumer confidence, that's the tipping point. So at Washington Crossing, we've taken our equity allocation down from more significantly overweight earlier this year to just above our neutral level. But the trend has been down in terms of our data and down in terms of our allocation to equities. And we're just looking to see whether or not the sentiment in August now spills over into weakness here at home. And we're just not there yet to cut to a bearish case, but it's clearly weaker.
All right, guys, one more reason to pay close attention this week. Kevin, JJ, thanks, guys. We'll see you soon.
Thanks, Carl.
Thank you.
5 states are now under a state of emergency as Hurricane Dorian batters the Bahamas. Contessa Brewer joins us now. She has the latest on the storm. Contessa.
David, it's been downgraded to a Category 3 that has only just started moving again and only at a mile per hour, according to the National Hurricane Center. So wind and rain continue to lash the Bahamas. The prime minister there called the damage catastrophic. Infrastructure, communications, power lines, roads have been devastated. Freeport is the industrial center. It was slammed. Tourism is, of course, a main driver of the Bahamian economy. And we're still waiting to get some details coming in about the extent of the damage here. But we know analyst Harry Curtis at Nomura Institute has put the impact of the canceled cruises in the region at 5 cents per share. That's across cruise lines. In Florida today, we're looking for Universal to open. Disney will open, but will close early. That's across Disney World. Both are closing one of their water parks. SeaWorld, Kennedy Space Center, Legoland closed. Mandatory evacuations are in place in counties in Florida, Georgia, South Carolina. Seaports are closed. In fact, the Port of Charleston will close tomorrow. A central rail line through Florida servicing CSX, Amtrak, and Sunrail has been shut down. UPS and Uber have suspended service in some places. And at least 1,400 flights have been canceled now. Airports in Orlando, Palm Beach, Fort Lauderdale closed. Though Fort Lauderdale is considering reopening, they're going to make a decision here in about 45 minutes. And Miami remains open at this point due to the changed course of this storm. Carl?
All right, we're going to watch that closely. Obviously, just a brutal storm hovering off the coast of Florida right now. Contessa, thanks. We do want to bring your attention to a tweet by the president about China. We're doing very well in our negotiations with China. While I'm sure they would love to be dealing with a new administration so they could continue their practice of rip-off USA, $600 billion a year. 16 months plus is a long time to be hemorrhaging jobs and companies on a long shot. And then think what happens to China when I win. Deal would get much tougher. In the meantime, China's supply chain will crumble and businesses, jobs, and money will be gone. Just to give a sense of how the tone is going between those two sides.
Yeah, and no real market reaction. Remember, a week ago we were kind of jockeying for the signals, and now it just seems like the market's entrenched in this idea that not a lot of movement on this front.
When we come back, reports of tensions between Boeing and air safety authorities now threatening a new delay of the 737 MAX. We'll get some details. Take another look here at the pre-market on this first trading day of September. We're back in a minute.
Business flash. So we're hearing from an opposition.
This CNBC program is...
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent with Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow, because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the? Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Facing some new delays in returning its 737 MAX to service. That's according to a report in the Journal today. International regulators are reportedly upset over what they perceive as a lack of information from Boeing on its proposed software fixes for the grounded jet. And we know what United and American have already said about return to service probably into September, which is pretty much the heart of the travel season.
Yeah, exactly. I mean, it keeps getting pushed out. It's interesting. Boeing shares up like $40 in the last 2 weeks. So it sort of came back up below the lower end of this range, but it still does trade in a range, even as it gets deferred in terms of the comeback. I also think, the effect on the macro manufacturing numbers has been significant too. You look at GDP, if they slow down production, it actually it moves the needle, even though it doesn't say much about anything beyond Boeing. So I do think it kind of fits into the general overhang macro slowdown story, even if it's, not something that has many legs beyond that.
Yeah, if you were going to have a grounding of any kind of airliner, from an economic standpoint, this would probably not be the time. I've heard anything from a quarter point GDP to, I think Secretary Ross says maybe 0.4.
Right.
Something, it's significant, right?
It is, but then it also gives you a little bit of an asterisk, right, if you want to evaluate how the underlying economy is doing, and it sort of feeds into the consumer versus industrial split that we've been looking at for weeks now.
Right.
Would not expect it would be outperforming the S&P over the last year. To your point earlier about the S&P being
built
flat.
up such a huge cushion against the S&P.
It did. And Boeing being up a little over 6%, I guess.
Yeah. No, it's amazing. It really has not buckled the overall stock. People believe in the longer-term story, right or wrong.
Right. Even despite concerns among some that the Chinese could employ some kind of nuclear option where they blow up all kinds of orders, cancel their years and years of commercial deliveries in the years to come.
People get a lot of comfort about the global duopoly. Where are you really going to go if you need to long-term kind of feed the demand for air miles?
Right. In the meantime, the New York Stock Exchange and the NASDAQ are both holding a moment of silence for the victims of the Midland and Odessa, Texas shootings. If you haven't heard yet, a gunman killed 7, shooting randomly from a vehicle for over 10 miles. It is the second mass shooting in Texas in the last month, 283rd of the year.
We trust USA more than any other company out there. They give us excellent...
I can find and fund my car, from a Mini to a Jaguar.
Feel good
Good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow. Because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Take a look at futures here, down over 200 as we watch Dorian, ISM in half an hour, first day of September, a new batch of tariffs on Chinese goods. Opening bell is 7 minutes away.
September 19th, Vice President Mike Pence live at the Delivering Alpha Conference, just one of the influential names at the most important investor event of the year.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Path to accelerate growth.
EY has taken the time to really understand the challenges that we're facing and our vision for the future. Veridesk is a company that has evolved to offer a full suite of office products to develop fast, flexible workspaces.
Veridesk is building something incredible, and we are extremely proud to be a trusted business advisor.
I can. The 2 words whispered at the start of every race. Every new job. And attempt to parallel park. Each new draft of every novel. The finishing touch on every masterpiece. It is humanity's official 2-word war cry. Words that move us all forward. The same 2 words that Capital Group believes have the power to improve lives, and that for over 85 years have inspired us to help people achieve their financial goals. Talk to your advisor or consultant for investment risks and information.
Oh, wow. You two are going to have such a great trip.
Thanks to you, we will. This is why Voya helps reach today's goals.
All while helping you to and through retirement.
Can you help with these?
We're more of the plan, invest, and protect kind of help. Oh, yeah, helping you to
and through
retirement.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell in 3.5 minutes as Tuesday kicks off the month of September for the investing public. We're watching a bunch of different things, not just futures, but gold's up $16 as the FT puts it on page one. The holdings in gold ETFs pumping $5 billion in, I think, 6-year high in terms of holdings.
Yeah, it's been, clearly a huge bull move in the last, 6 weeks or so. You look at an 8-year basis, it's still down, so people feel as if there's a lot of pent-up demand. I think it's part of the same macro story we've been talking about. 0% yields around the world makes the opportunity cost of holding gold lower. But also, the U.S. dollar is making new highs. So it's not a weak dollar play at all right now. As a matter of fact, the U.S. dollar index above 99. A lot of that was yesterday's moves while the U.S. stock market was closed. It's pretty much at close to a 3-year high. Right after the election, the U.S. dollar index hit 100. So it's all, I think, part of this same kind of hunkering down trade that's going on around the world.
Speaking of other commodities worth mentioning, crude also down about 3.5% this morning so far. Trading right above $53 as you see WTI, and we'll show it to you in just a minute there, guys. Another reflection, obviously, of concerns perhaps about the global economy overall.
And then we love to monitor the German Bund 10-year, minus 72 basis points. As we're going to start asking more serious questions this month and next about whether or not there's any anxiety about further stimulus out of the ECB, right? Whether or not this rubber band is stretched as far as it can go.
Two-sided anxiety about that, right? One is, will they give us more? And two is, would it do any good? Or would it make any difference? I think a German recession of some description is probably now the premise. A lot of people assuming, at least on a technical basis, and that's reflecting that. In that context, the U.S. 10-year basically holding around 1.5, 1.5. The U.S. 2-year to 10-year curve is also kind of hovering in this zone right now of virtually flat. It's not the worst thing. It's not following the German yield down tick for tick, but it's, that's about the best you can say at the moment.
As for the new round of tariffs on Chinese goods, as we said, 15% on the $110 billion, obviously much more consumer focused this time. What's been Cramer's latest take on this round and whether or not it could impact consumption, if at all?
Jim has been somewhat standoffish, I think, would be the way to. I'm not sure he'd want me to paraphrase, but and not necessarily believing that we're going to have any resolution anytime soon. And so it's sort of been advising kind of pulling back a bit, I think, is fair to say. At least the last time we spoke, which was early last week. He was away towards the end of the week. You've made this point, Mike. I think it's an important one. The numbers themselves are coming down. We keep working with $300 billion, but it's not going to necessarily be $300 billion anymore.
In terms of goods that are affected.
Exactly.
Right. So whether that's good or bad, right? Whether that means there's less actual tariff revenue and just basically both countries are disengaging to some degree and lowering the stakes for trying to get a deal down the road. It's unclear.
Let's get the opening bell here in the S&P 500 at the CNBC Real-Time Exchange. At the big board, it's CNH Industrial, maker of trucks and tractors. At the NASDAQ, it's Patterson UTI Energy, a provider of oil field services and products. And to David's point about crude, back below, closer to 53 than 54 now, as a proxy for global growth, both whether it's European demand, U.S. or China demand, are a huge driver of global demand.
Yeah, and the stocks are essentially, they kind of like, they can't win either way because they underperform crude when crude is rallying, the energy stocks, and then they take the brunt of it when crude is pulling back. It's really kind of fascinating, despite the fact that energy is now less than 5% of the index. It's right at the center of why value and contrarian investing seems not to be working at the moment.
Very narrow winning breadth here at the Open, and the names you'll know at the top of the list will include things like Newmont, Gold, Hershey, Kimberly-Clark, couple Dominion. This is the usual suspects of what it looks like when you're counting on slower global growth.
Yeah, we should point out, so Boeing opens up down 2.8%, $10. That represents about 70 points on the Dow. So of the Dow's decline, 70 points of it, more than a quarter is Boeing at the moment.
keep your eye on Amazon today. We're going to talk to Mark Mahaney of RBC later this morning, who does take his target from 2250 to 2600. Reiterates his outperform. Be curious to see what his reasoning is here. I've been told it's regarding the impact of Prime one-day shipping and the initiative that might drive overall retail sales for Amazon. But 2600, I don't know, street high. If not, it's awfully close.
I would imagine it's pretty close. It seems also, I mean, you know, as there are so many believers in the long-term story, I still think it's got 100% buy ratings on it. You know, you take the opportunities if you believe in the story when tactically it's pulled back. I mean, it really has not been a great performer, certainly relative to the highs last year. So 1770 right now. Stock's not really responding at the moment, but there's a lot of headroom between where it's trading and where it was when it hit $1 trillion market cap late last year.
Yeah, there is only $1 trillion market cap
at the moment,
right now.
That's
of course,
right.
That's Microsoft, which has been the case for a bit of time now. Mike, you and I were very focused on Friday on Ulta. Because of that incredible percentage decline in the overall value of the company, given what were unexpectedly, well, not the numbers themselves as much as it was really the guidance and changes in behavior. We spent a lot of time on Friday talking about it. I did have a chance to catch up with my 14-year-old daughter this weekend, sort of get her take on it all.
You're up on contouring.
I'm much better. I'm much more well aware of it. She says it's a little early to buy the stock. No, I'm kidding. Right. She has no idea about whether to buy it or not. But it is down yet again, just a little over 1%, but no bounce there.
No bounce, and I do think, to your point about the guidance, it was a lot of commentary about the category in general and just, you know, the sort of cultural momentum behind some of the cosmetics trends. I do think that's what spooked folks in an expensive, you know, specialty retail stock.
Have we had a chance to talk about this one with Jim? Right?
No,
Ulta's been one of his.
No. Yeah, we didn't.
And is it the best S&P over since the crisis? If not, it's in the top 5,
pretty
right?
Close, yeah. Now, it wasn't in the S&P at the time of the crisis, so you have to, you know, account for the fact that it made its way in. But yeah, it's been a monster performer. It's still, you know, $13 billion market value for a relatively modest-sized company.
Well, obviously, it might be used as a proxy for the bearish case put out by Morgan Stanley again this morning. They point to 3 things: the obvious decline in confidence that we saw last week, net job creation, work hours beginning to roll over a bit, and then personal earnings growth, average weekly earnings, especially on a real basis, is nowhere near where it was at the beginning of the year. Yeah. Their theory is that this eventually does hit consumption and consumer spending, and kind of how it impacted business investment earlier in the year.
Yeah, I mean, there's no doubt that the weekly earnings number that they cite has certainly rolled over. It's still growing, but definitely more like the trend of several years ago as opposed to the more past couple of years. And I think that's the front line of the debate right now is can this be just considered a industrial kind of manufacturing trade downturn, or is it going to be something more pervasive? Last week, the data were mixed, although the ratification, we got a 2% quarter in the second quarter, revision of GDP. I think comforted some folks, but the bond market didn't really respond to that. The consumer sentiment from Michigan was way lower than the Conference Board Consumer Confidence. Right. That's often also cited, that widespread, as a pre-recessionary condition, too. So I do think that we're not out of this zone of feeling as if it's touch and go as to whether the U.S. economy can kind of plug along at the 2% pace for a while or better.
The White House would counter by saying current assessment of the economy is a 19-year high by some measures, but it's the expectations component, what people think it's going to be like in a year. That's falling.
The confidence components that heavily weight current conditions and employment circumstances are very strong. And so that's kind of a good thing. That's what we know. I don't think we can trust consumers to really be able to project the business environment down the road and say what their outlook is. But it does show you there's an anxiety. And I think with the stock market, it's a very similar thing. I think people can look and say, hey, stocks look reasonably valued. Certainly if bond yields are going to be anywhere in this zone on a relative basis, stocks look good. Dividend yields exceeding bond yields and all the rest of it. The question is, what can we anticipate from here? And is this going to be essentially a profit peak that we're valuing stocks off of right now? And that's what we don't know. I take heart in the fact that sentiment really has turned very negative. And the last couple of times we had an 18-month sideways trading range in the S&P 500 with sentiment very negative and bond yields very low, 2011, 2016, and then you got another big up leg in the market. But the question is, how many more of those do you get?
It works until it doesn't.
Quiet morning when it comes to M&A, guys. Certainly, sometimes there's an expectation, perhaps after a long weekend and the beginning of the fall, if we want to call it that, even though I know we have a few more weeks technically till that begins. We start to see some announcements. Let's not forget, though, we're only a week away from what was at least news of, conceivably, what would be the largest transaction we've seen all year. Altria and Philip Morris International, of course, in talks about an all-stock merger of equals. We told you there, no premium, and those two stocks did react to that initially on that day in question, which I think it was just a week ago. One other deal that certainly I followed for so long before it occurred, but since then many investors are probably sorry they ever followed it all, is CBS and Viacom. Don't know if people have paid attention, but in the last few weeks since the deal was actually announced, those stocks have done nothing but go down. You can take a look, of course, Viacom and CBS. They both trade more or less in line with each other, and they're both down about 1.6, 1.7% right now. And if you take a look at the last few weeks, you'll see not the reception, perhaps, that had been hoped for, though the two companies obviously continue and will continue to extol the virtues of their potential union. We're going to hear more about it, I would expect. We got Goldman Sachs' media telecom conference next week. We'll get some conversation there, I'm sure. Todd Younger, fairly negative analyst overall at, I shouldn't say that. He's been negative on these companies for some time at Bernstein. He comes out with a piece this morning saying, in his opinion, even though they keep talking about spending as much as $13 billion in combined content, a lot of that's on sports. A lot of that is non-scripted. And he would go on to sort of say that stuff doesn't necessarily work when you're looking to compete against Disney Plus and Netflix and Hulu in terms of the direct-to-consumer world. And that's where a lot of investors are focused. Is this going to give this combined company the wherewithal to really compete in that world? Younger makes the point, listen, The Daily Show, take that for an example. Yeah, it's great, except it's a daily news program. It is comedy-related, obviously. Depends if you think he's funny or not. But the fact is, you're really going to want to watch one that's a few weeks old, let alone a few years old on a service like that. And you could make the same arguments to a certain extent for Jersey Shore or Teen Mom or The Hills. The library value, he says, isn't zero, but we don't think it's much higher than that. And that's actually something I've been hearing prior to his putting it in print from some other investors in terms of how much they really need to spend and whether they actually have the scale to do so.
Yeah, I guess it really then leaves you with the idea that putting these companies together is about kind of shrinking more smartly or becoming a more focused player in the areas where they have some kind of an advantage, not really going head to head and saying we're going to have a full-fledged, streaming
or
product.
About whatever is next. Either
right, exactly.
It's continuing to bolt on and add or possibly deciding to sell. As a combination. Again, that's all speculation, but it has been a decidedly negative market reaction thus far, at least, to the deal itself.
Yeah. We're obliged to bring you the latest tweet from the president. For all of the geniuses out there, many who have been in other administrations and taken to the cleaners by China, that want me to get together with the EU and others to go after China trade practices. Remember, the EU and all treat us very unfairly on trade also will change. This might stem from some comments earlier this morning that this would have been a better practice taking on China had you had help. It would have prevented suppliers or China from massaging supply chains that still act to their advantage.
Right.
If you had others on your side.
And presumably that's going to be one of the modes of attack by whatever Democratic opponent comes out there. Not so much we should have been, easier on China, but there was a smarter way to prosecute this trade contest.
Including TPP, which, of course, the administration pulled out of very quickly. Now, by the way, it was unclear whether it was ever going to get congressional approval. Right. But a lot of people who've come on our air over the last year or so always point to that as having been a fairly effective tool, in their opinion, in terms of isolating China and creating a real fair trade zone, free trade zone as well with many of the other Asian nations.
Yeah. Really quick, Reuters has a couple headlines about the ECB citing sources. They have room for about a year of QE, using flexibility under existing rules, and that they're leaning toward a rate cut, reinforcing guidance in September 12th. Stimulus package. So who knows if that's why we're off the initial lows, but computers are seeing those headlines as we speak. Let's get to Dominic Chu, see what else is moving. Hey, Dom.
All right, so Carl, good morning. As we talk about the idea that setups are starting to happen as Wall Street gets back into full swing coming off vacations, we do see that we have a S&P 500 that's currently hovering just around 2909 or thereabouts. So still making a move towards that 3,000 level and holding kind of steady right at 2908, as you can see here. So as we watch what's happening with markets, a down day across the board. But what's interesting about the setups right now, take a look at some of the ways that the cap structure is worked out with regard to small, medium, large cap stocks. If you look at the S&P 500, Russell, and the mid-cap 400, that's the way it is. The Russell 2000 is still up about 10% right now on a year-to-date basis, 12% for mid-caps, and then 16% for large caps. So that gap between small and large continues to get a little bit bigger right now. That's something traders are watching. Also, the development between growth and value. So far this year, there has been a market outperformance in certain parts of the market, specifically with regard to growth stocks over value stocks. One thing that you can see here is the Russell 1000 ETF, the one that tracks it, the IWB, is up about 16%. Meanwhile, the value side of things is up about 11% and almost double that in terms of the growth side of things. So growth continues to be the driver of that environment for stocks overall. We'll see if that trend continues. You can see that kind of gap getting bigger there. Also, with regard to the sector performance over the course of the near to medium term, if you take a look at the real outperformance and underperformance in the summer months since about the end of May, a massive move for technology, up about 12%. Meanwhile, financials and energy, the two worst performers. So you can see that technology, communication services trade still really driving a lot of the action here. That'll be one thing to figure out as the volatile summer kind of comes to a close heading to the year end. And then just to kind of put a bit of a macro spin on it, remember, so far this year, stocks, bonds, and gold have generally performed all within the same relative area. But over the course of the past 3 months, that's where the real outperformance has come out. Stocks in the S&P 500 are only up about 6% over that 3-month span. Meanwhile, long-term treasury ETFs are double that performance and triple that coming from gold itself. So as traders get back toward the second half of the year and going into the last maybe holiday season part of trading, that setup is going to be something that's going to be real key. Does it break down? Does it return to historical norms? Or do gold and haven assets like bonds continue to outperform stocks? All some of the big themes that traders will be dealing with, Carl, as things get back into the last 4 months of the trading year. Certainly something we'll be watching today, guys. Back over to you.
All right, Tom. Thank you. Tom Chu back at, actually, right over here, my shoulder. All right, let's get over to Bertha Coombs. She's at the NASDAQ, has more for what's moving on that market this morning. Bertha.
Yeah, I'm up a few blocks from you. The NASDAQ in the red along with everything else today. Small caps also lower. Interesting, Dom was talking about the Russell 2000. The Russell 2000 will lap its 52-week high tomorrow, and it is down 14% from 1 year ago. A little better on the NASDAQ composite overall, not in correction territory. Apple, one of the big drags that we have seen over the last month as there have been concerns about growth, about a slowdown in consumer spending, and also, of course, the tariffs. The Apple Watch is among the items that will be taxed with those new tariffs of 15% that are now in effect. The FANG names, we're seeing a mixed result right now. Amazon a little bit higher, notwithstanding the fact that folks are worried about what all those tariffs are going to mean for consumer goods. The only one of the FANG names that is not in correction is Alphabet. It's down about 8.5% from its 52-week high. Chips continue to be in focus as well. They have come under pressure whenever we've seen these tariffs concerns, down about 1% this month after falling about 2.5% in August, just shy of that, off about 8.5% from its 52-week high. But bucking the trend this morning is Tesla. The U.S. and China may not have a meeting, but it appears he did have a meeting in Beijing and came away with a tax break for Tesla owners, notwithstanding the fact that Tesla continues to hit new lows. Back over to you guys.
All right, Bertha, thank you very much. We'll see you in a little while. Let's get to the bond pits as well. Check in with Rick Santelli at the CME Group in Chicago. Good morning, Rick.
Good morning, Carl. Treasury rates continue to kind of surf right above cycle lows. Look at an August 1st of 10-year note yields. Last week, we had a 147 close in 10s. That takes you back a little over 3 years, basically August of 2016. Here we are at 149. Now, if we look at a 3-day chart of the 2-year in Europe, known as the shots, you can see it dipped into the mid-90s. Now it's only in the light minus 90s, but it really underscores, most likely, you're going to see triple digits in the front of the Euro curve after the September 12th meeting, or at least that seems to be the whisper on the street, that there's going to be a rumble of stimulism in front of course, a change of power from Mario Draghi back into the head of the IMF, Christine Lagarde. With respect to the currency market, look at the pound versus the dollar. This is a 20-year chart. you won't find the dollar stronger anywhere, the pound weaker, because it goes actually all the way back to February of '85, since we were last at these levels. Of course, Brexit politics figuring in largely in Boris Johnson's strategy to try to have a no-deal Brexit to get a better deal Brexit. And finally, the other big currency, the euro versus the dollar, lowest level since May of 17, which, by the way, is the last time the dollar index was at current levels. Carl, back to you.
All right, Rick, we'll see in a little bit. When we come back, the latest round of tariffs taking effect, how it's impacting staples like food. Former McDonald's chief Ed Renzi is going to be with us, and then later the CEO of Ethan Allen on how tariffs and the trade war are impacting his bottom line. Dow down 249. A lot of that is Goldman and Boeing. And by the way, market PMI, 50.3, a 10-year low with ISM on the way.
The Bond Report is sponsored by PIMCO.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow. Because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Every Tuesday from August 12th to September 3rd at participating restaurants subject to availability.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Whoa! Shell saltwater supercars. They look fun.
Science-fueled fun, actually, Dad. Toy cars that run on salt water.
Fuel the family fun with Shell Saltwater Supercars. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
I want one.
Okay, Dad.
Fill up on fun with Saltwater Supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
Germany and so many other countries have negative interest rates, says the president. They get paid for loaning money, and our Federal Reserve fails to act. Remember, these are also our weak currency competitors. Dow unchanged on that, down 264.
There's golf. And there's the golf lifestyle.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor, and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Make sure you're uni ready with our huge range of practical essentials and home from home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
People have always told me